So, one of my weak points in trading has always been journaling. I used to actually print off all of my trades and I would have printouts of them, and I found that really worked because I could really look at them. I didn't need to go and turn on a PC or a computer or an Excel spreadsheet or some trading journal. So I did do that, but I've come up with this now. I'm just going to do short, sharp videos, just under 5 minutes, as my journal for good days, good weeks, or good trades. So this trade here. So what's happening here is we come to the 30-minute time frame. We'll look at it on various time frames, but the first one I'm monitoring all the time is 15 and 30. So the behaviour between both. So we can see here, broke a level here and I've entered. But what I would have done in the past, and what many people do, is we would have entered when we broke this level here. Because you would say this is much more of a significant level. This goes back to 6 o'clock in the morning, and now we're at New York Open. So you're talking a good 7 or 8 hours here that's been broke. But the issue with this is the stop loss. The stop loss here, if we were taking a position here on the break, would have had to have been up here. So it's not really a good stop loss. Also, what's to say that what could have happened here was just a sweep. So this could have swept through, just sweeping this candle here, or this candle here, or this area here. They are all possibilities that this sweeps down, takes all this before heading back up. So what I done in this instance is I just waited. Now what I now know is, we've broke a level that I couldn't enter because of the stop loss. Now we have already confirmed the big strong move, big strong bullish move, bearish move, sorry. You can see it here, big strong bearish move. And then the perfect thing that we've seen was a retracement. Now this retracements are never, they can't be any more than 50% of the previous candle. So this is perfect. This moved up only about a quarter, and it allowed me to put my stop loss just up here. And then my target would have been obviously this area down here. Target would have been down here, and that was giving me like a 2-3 to 1. Now this happened after the New York session. On this particular day, I remember I had plans, so I closed the trade. But for me, my style, anything that happens after the New York session, maybe 30 minutes to an hour after, I will then switch my active trade to the 5 minutes and start trailing the stop loss. So let's look at this on the 15 minute, and we get even stronger confirmations here on the 15 minute. So where are we here? So you've seen on the 30 minute that we had that candle that traced back, this bull here, but that was made up of this and this, and this is perfect. This is an A plus setup. This is what you want to see in a retracement of a 30-minute candle. A bullish candle followed by an indecisive candle. I mean, it can be two bullish candles as long as it doesn't go above 50% of this previous bear. But this is an A plus setup for me. A bullish retracement followed by an indecisive candle. Then I enter my trade here. So when we're up in this area, I actually will go here, and I'll already, so I'm not logged in, I'll set my trade before we come down. And if it shoots away back up, then I don't get triggered in. If it comes down and breaks this level, I'm in the trade. So another thing, looking at these candles, what we see is, you see how this wick here has come down lower than this? So it's already took out this, let's call it liquidity. So if it comes back down here, it's coming back down here not just to sweep this, because it's already swept it. So when you're coming down here and you start to see it breaking this level, I had 100% confidence this was going to come down. I mean, it went even further. I could have, got a potential 5-6 to 1 out of this trade. But as I said, I was happy with this. I'd had a trade, this is Nasdaq, I'd had a winning trade on gold on this day as well. So yeah, I want to keep these videos short and snappy, so I'm not going to go into any further detail, apart from I can also see this is my own custom made indicator that I can see there was big selling volume coming in here as well. So there's another additional confirmation that the market's gone down. So if we come down to the 5 minute, I'll just monitor the 30 and the 15, but when I'm in a trade then I will look at the lower time frames. Now as you can see here, in this particular trade, right, if I had been monitoring it, which I never, I closed the trade at about 2.8 to 1 or something, but if I'd been monitoring this, my stop loss would have been here, trailed to here, you know, and then when the market came down here, I would have trailed to here, trailed to here, and you see I would have been in this trade all the way to this level here, where I would have been stopped out here. So what would we have got out of this trade? We would have got like a 5 to 1, 4 to 1, 5 to 1. Yeah, so I want to keep these videos short, sweet and snappy so I can refer back to them myself.